Now we're going to pivot into Europe and what is happening with some of the recovery. Where are we with COVID? Because COVID is still sticky in Germany, but we're starting to see some of those declines in France and in Italy, with Italy already starting to talk about that reopening. What is that going to look like? And we'll touch on that in this segment. And then Macron is going to provide some color on what that is going to be, over on Friday on what that reopening is going to consist of. The biggest issue right now remains the slow vaccine rollout. Because yes, we've seen, this is looking at 14-day COVID-19 case notification rates, and you can see that they're still elevated. There's still a lot of COVID going through. They're still at elevated rates, specifically in France when we consider about, well, how quickly are they going to reopen? Italy's in a better spot. Germany has some pockets, but mostly has gotten better. And that's going to become, I think, a bigger issue going forward as to what does that reopening look like? What is that expansion going to be? Because they don't have the vaccine rollout to help protect against another resurgence. And that's going to be that counteracting component to, well, how fast and if we start to see an acceleration in case counts, do we lock back down? Is it just, look, we need to get through this? And those are going to be some of those competing factors. So then when we look at the revving up, so Italy GDP is set to grow faster than many neighbors, but Draghi still has the most ambitious stimulus program. So that's why, when we look at when you dump money into the system and government spending is going to go up and you're going to give money to people, they're going to go out and spend it. So again, these are some of those things that are going to continue as the budget deficit continues to shift higher, with the most being out of Italy. And given everybody has a budget deficit, I mean, you can go around the world, everybody is just issuing paper, trying to raise capital. Because why not? I mean, it's free, it's cheap, it's easy, and there's, your central bank will just buy it. So here's where we're going to continue to see, well, for how long? And does the GDP growth outlook have to get reweighted lower because of some of the drags that we're going to see from some of this debt over the rest of 2021? Now, when we look at the Eurozone public debt and outstanding public debt, so public debt has obviously gone up in general, but outstanding public debt net not held by the central bank. So we can see, obviously, central banks have been buying a lot of public debt, and that's not surprising. Just if you look anywhere around the world, central banks have a very, very easy monetary policy, and now now we're starting to see more of we're starting to see more people outside of central banks buying up debt as some of the rates have gone up and people look for cash preservation versus cash appreciation. And that's going to be a very interesting time period to see, okay, well, how does the central bank stop? Because that, as you can see, going back to 2009, it's been a very steady course. It started to roll over in 2020. And then obviously there was that big step up as COVID, ran through the globe, really. Now, when we look at the aggregate on the Eurozone aggregate, so here you can see the manufacturing surprise to the upside came in at 63.3 versus an estimate of 62. Services was a nice surprise, coming in at 50.3 versus the estimate of 49.1. So we're getting right to the cusp of growth. We're right there with the Eurozone composite seeing that 53.7, coming to that top level. The problem is the underlying components are still, delivery times, cost. So when you look at that, you have to think, okay, well, there's growth, but it's not really that much growth on the composite side, because you have to say, okay, well, some of these things are a bit detrimental to actual growth. It's just being inflated higher. On the manufacturing side, that's clear on growth. Even if you back out some of the negative contributions, it's still going to be a positive number. So then when you look at Italy, which is, I think, the better front of it, and consider that you're coming out of lockdown, you're going to get a new stimulus package. So consumer confidence surprised to the upside. The survey was at 101.8, came in at 102.3. Manufacturing confidence came in at 9, was expected at 102.1, came on at 105.4. So clearly, there's that confidence, there's that movement, which is going to be a positive. But when we look at the Apple data, when we look at the toll roads data, some of that has been priced in at this point because we're seeing some of this flatlining and some of this tailing and some of that activity as the economic sentiment also improves to 97.3. Now, shifting gears into France. So France manufacturing PMI came in at 59.2 versus the estimate of 59. But the services PMI, which was expected to be at 46.7, came in at 50.4. That is the biggest surprise in terms of that movement. And this one, when you break it out, this shift is actually a bit more sustainable given some of the movements that we've seen, which is why the composite in France is a net positive. It was expected at 49.4, came in at 51.7. This is a positive movement in general because we're starting to see a little bit more confidence, a little bit more pressure to get back to normal. And then consumer confidence expectation of 93 came in at 94, which I think is being reflected in some of that services as job seekers decreased slightly. But again, France is starting to see some of this movement. And it would be nice to see a sustainable rally outside of lockdown because France could provide a fairly significant bump to European GDP, which would be a net positive in terms of what some of that growth is, where Italy's kind of an unknown at this point. Spain continues to struggle, but France could be one of the bigger drivers there, which is then when we shift into Germany. So Germany was going a bit the other direction. So manufacturing was up to 66.4 versus 65.8 survey. There's a lot of negative drivers in that, from delivery times, from pricing, even backing it out, still a gangbusters number, still very strong. But as Asia slows down a bit, that's going to put some pressure on some of that German manufacturing. Now, on the service side, so service PMI was supposed to be at 51, came in at 50.1. So that's where we're starting to see a little bit of a rollback in Germany. So Germany was hot off the gate. They did very well. Now you're starting to see a little bit of a pare back, which is why the composite came down to 56 versus the estimate of 57. And it's gonna be a long road because, as I said previously, France could provide a nice uplift, but Germany seems to be taking a little bit of a back seat here, which could weigh or offset some of that French benefit. Now, when we start looking at expectations from the IFO, expectations were they were supposed to be at 101 point. Estimate was for 101.2, came in at 99.5. Current assessment came at 94 point. Was estimated at 94.4, came in at 94.1. Business climate the survey was at 97.8, came in at 96.8, with consumer confidence expected at a negative 4.2, came in at negative 8.8. It's also important to appreciate they have a big election coming up. Merkel is leaving. She has opened up or paved a way for someone from behind her. But that uncertainty also leads to some of this concern. Well, who's going to win? What is the majority going to look like? What is the coalition going to look like? And these are things that are going to become a bigger overhang, which will cause some slowdowns and some consumers to pause a bit in terms of what do they do? How are they feeling about their underlying opportunities? And that's why when, just following up on Italy, because this is where Italy is going to see some benefits, the Italian government's recovery plan forecasts solid growth after a pandemic dip and years of low growth, because they're going to obviously dump in more spending. And the ECB has been more than happy to buy a lot of that debt that is being issued. So again, this is going to be a net positive because government spending. So we will see that bump up in Italian capacity. But what about Spain? What about traveling? Because the Spanish economy relies a significant amount of tourism, and the number of tourists just aren't there. Where the number of tourists visiting Spain fell to 0 early in the pandemic and remains well below pre-COVID levels. And we just don't see that returning, especially even if we get a reopening of Europe to any real degree. It's just people are going to stay local, limit spending, and that's going to weigh, especially on places like Spain that rely significantly on some of these individuals in general. So then when we turn a bit to the recovery in the Eurozone is going to lag the US and China for several reasons. And the biggest ones is just the size of the stimulus, because the US is dumping, tens of trillions. So we're talking about where we're by, once the infrastructure plan goes through, we'll be up to about $15 trillion in stimulus between monetary and fiscal. And that is going to go to our trade partners just as much as anything else. And you had China come out of COVID first. And as much as I am negative China, you have to respect the fact that they were out first. And they still have a very strong export market. We still rely on them from a global supply chain level. I think they're going to start losing market share. People are going to shift supply chains, and they have been, but that takes time. That doesn't happen overnight. And that's going to keep the Eurozone because they were struggling a lot before COVID. They don't have the capacity or the law of diminishing returns caught up to them first based on the level of stimulus, which is, again, going to limit the amount of recovery that we're going to see. Now, when we look at the Euro area, manufacturing PMI is still distorted upwards by supply bottlenecks. So this is what we were talking about. This is the supply bottlenecks that continue to push it higher. Now, when we look at the without delivery times, you still have a bullish number, which is why I am not saying it's still not good and expansionary. It's just not what is expected, or is not as good as it appears. And those delivery times will result in way more inflation, price increases, which is going to hurt that consumer consumption side. So then when we look at the key drivers of Eurozone inflation, this is what we're talking about. Well, this is when we start looking at reopening. Obviously, crude has become a big issue as well, just in terms of where things are going. But then when you look at the reopening bump, when you start looking at the other factors, I think are becoming a much bigger side, especially when you look at food, issues, and you look at the different German emission pricing. Again, all of the Eurozone inflation factors are there and going to continue, and they're only going to get worse through 2021, which is where they assume that you're going to get this decline into 2022 as some of the supply issues and supply chains go away. But again, what is transitory, and do they go away that readily? And when we look at the UK, just showing the PPI side, the survey was for 1.7, came in at 1.9, and it's just reflecting everything that's happening around the world. The UK is not unique in PPI growth. It is just one of the many that is seeing just a continuous increase in some of these pressure points. And now when we look at the Eurozone Consumer Confidence Index, the survey was for negative 11, came in at negative 8.1. And that's because we're starting to get this reopening movement. We're starting to get this feeling good about being able to get back into that market. Then when we shift a bit and the end of PEPP unlikely to mean the end of net asset purchases. So when we look at the forecast, so asset purchase program and the pandemic emergency purchase program, the PEPP, will remain in place well through into 2022. And the ECB is ramping up their balance sheet expansion to sedate bond market yields. Total assets rose by 36 billion, most in a month on QE. ECB balance sheet now at a record of 7.6, just rounding, trillion euro, equal to 70.4% of Eurozone GDP versus Fed's 36.4%, BOE's 37.4%, and BOJ's 130%. So there's still a lot of room to go. They're still going to continue to see those increases. The Fed is doing its part to continue to rise their own balance sheet. But again, this is just showing where things are going and how we are far from done from QE. And this is just looking at those expected PEPP purchases, because we did see an acceleration. And the guidance that we got from Lagarde and from the ECB is that they're going to maintain that accelerated pace as Italy issues new debt, as they start to come out of their come out of COVID lockdowns, that's where we're going to start and continue to see this acceleration of just more net purchases overall. Now, when we look at just the polls in general, the CDU and the CSU has lost some of their support in general. Now, this is just looking at, versus last year over the last few, and it's just been whittling down. And I think, I have a different chart for our write-up for our clients. But here's where you can see the pressures coming through. But then look at the Green Party. The Green Party has just exploded in their support. And you can see that the Green movement has really gained a significant amount of support over the last, not even just the last year. It's been a gradual movement, and it's unlikely to stop. As you can see that they've taken support from pretty much every single party going throughout. But the CDU is under an existential threat. And there's a significant amount of people that were supportive of the CDU, voted for Merkel multiple times, but refused to vote for the current candidate. And that's going to become problematic as to, are we going to see a surprise? Or are we going to see a no decision, and it's going to allow the Green Party to gain more influence with what the coalition looks like? And I think this is going to be a lot of uncertainty as to what is the direction of Germany. What do they do with coal? What do they do with stimulus? And I think this is going to be one to watch as we have some pretty sizable adjustments and changes in the political landscape. And that's why when, just reiterating the fact on what is expected on the manufacturing side, this is where we see some of these slowdowns. Now, manufacturing is going to continue. There's a certain amount of demand, but the service side is very much consumer driven. And that's when we look at the overall business activity it remains weak. The services side is seeing some of that softness. And it's that residual of, I'm not really sure what happens, so let's be cautious. Let's adjust some of these different components, which again is going to be some of that headwind. So then when we look at that consumer confidence, this gives you an idea of just how low it is right now. And consumer confidence is always an unknown as you go into a political, especially a very big election with the changing of the guard. And that's where I think this is going to weigh on some of that German economic growth through the next quarter or two. Now, when we look at the IFO again, I just wanted to show it on the chart because there's some slowdown, but it's still strong. It's not like we're seeing this huge reversal. It's just we've had a strong movement up. Exports remain under pressure given issues in Asia, continued lockdowns in Europe. So there's a certain amount of plateauing that is happening, and now this uncertainty on a political level is going to remain as an overhang, which is when you look at manufacturing employment. You even though the PMI has surged, so even if you back out, like we said, delivery times, inflation, all of these things, it's still a good number. But we haven't seen employment actually respond in any meaningful way, which is why the view is that we're going to get some of this movement higher. And if we get employment coming back, that will do a lot for consumer confidence and would be that next residual boost to the service side, which is going to be kind of a wait and see in terms of, how quickly does it happen? And do we really get it as we get to the other side of the election? So a lot to look for as there's continues to be uncertainty in the European theater. But next we get to turn to Asia and some of the issues that remain in the Chinese markets.